And good afternoon. This is the Elliott Wave daily update for the NASDAQ 100 being recorded on Monday, August the 25th at 3 p.m. Pacific Daylight Time. Okay, the markets are just about ready to reopen, and it looks like they may just try to open up a little bit. We'll see what happens. Um, what I'm presenting this afternoon is basically just a couple of alternates and one that kind of just extends the current. Let me add a little bit of text there. And I want to put this back up and put the two back over here. And just to show that this side of the alternate is still in play, possibly. So I'm going to leave it there in the parentheses to show that maybe it's going to go there, and maybe this is A, B, and we're going to come down in a C wave and finish it just by dipping just below that level, which was 23,035. 23,001 is 618, where wave C would be 618 of wave A. Very acceptable. Not the most common, but is acceptable. And then we move that 2 over if this comes down in 5. Now, that's an alternate. But if I'm going to leave 1 and 2 there, and then this is 1, 2, 3, and we still got a 4, that's also a possibility. And so this would be 1, 2, then a 3. And so we'd be looking at to see what type of upside might be left for wave 3. Well, we got up to 1.618, so not very much. But it could be the third. And now let's go back and just look at something different as well. If this is 2 and this is going to be marked as 3, let's see what pullbacks could look like or what they should be held to. Right now, it's still being held to 382 and went up today, came back down. So it gave up everything and then, still appeared like it needed an additional downside. I'm actually going to leave these here. And so this would be 1, 2, 3, and this is going to be actually in the sub level. So let me get that up there and show that we have 1, 2, 3, and now we're coming down in a 4. And that 4, we have 302.50, and don't think we need 618. So what we still have left on there, just for coming down, is 23,428, 23,359. There's that possibility. So again, that would be 1, 2, 3, and 4 of this minute third wave. So it could be 1, 2, 1, 2, 3, 4, and then a 5, and it's wave 1 of minuet wave 3. And so that's a possibility. We still have the fifth wave coming up to 24,616 or 25,000. I think that's almost to 26,000. So it's a beautiful high. It gets up there. Damn it. So what I'm looking at is how it could get up there. So a couple of things. We come down, we either finish this 4 and then rally in strength again. And if that's the case, we go from here to here, and we'll see what it would look like for a fifth wave. And I can just give you a guesstimate here. And we'll just go like that, go up. Let's just say it's right there. Well, 100% is 23,774. And then again, that's going to be 1, 2, 3, 4, 5 shows it could be minuet, or it's 1, 2, 3, 4, and then we start to subdivide. So this is 1, 2, we get a 3, a 4, and a 5, and we get up here, possibly, for minuet wave 3, or it's going to be sub minuet wave 1. So a lot of interesting things yet, which could just really keep this going. The market remains on watch and just waiting eagerly for NVIDIA's earnings on Wednesday. Tomorrow we do have some figures early. Tomorrow we have the initial durable goods orders minus transportation, which is always interesting. And then those are 8:30 a.m. 8:30 a.m. Richmond Fed President Tom Barkin will be speaking somewhere. 9 a.m. S&P Case-Shiller Home Price Index. 10 a.m. Consumer Confidence, which is now it is being forecast to drop a little bit. So nothing earth-shattering tomorrow, but except durable goods, and we'll see how that may or may not um, come in. And it's looking like July. And previously it was down 9.4%, and July is supposed to be down in 4%. So that could just be a continued, like not looking very good. So again, we could be coming back down. So the other, no, that's that one. If we can get this 1, 2, 3, and a 4, and it comes down and holds there, we've got some nice upside. I'm not going to leave all this there because it would become extremely confusing. Now, third, we have ABC down, forming wave A of minuet wave 2. And then we have an ABC up, forming wave B of minuet wave 2. We're coming down in a C wave. And this C wave could actually, I would anticipate, might come in at 6.618. And that just gets it a little bit lower than the A wave. And that's perfect. That's 23,010. The A wave was at 23,035. Puts in a slight new low, C below A. That works. The 2 comes over here, and then we start to rally. Could that happen tomorrow? Well, yeah, it could. Or it could happen in reaction to earnings on Wednesday. Who knows? Or it could happen on Wednesday. Because the earnings come out after the close. So that's how many did I get? I got 3 scenarios that I just put out there. And the market is just channeling inside. So everything remains active and possible. Now, to just address people that say, well, Elliott wave has no predictability, it's like it does. Because if you really study Elliott wave, we already know that a corrective process, corrections have 13 different variables that they could go in. So to try to pinpoint, say, oh, yeah, this is what it is, it's going to turn around and tell you, nope, fooled you. And it's just a product of and the nature of what's going on in the market. They are waiting for NVIDIA. They are waiting for September the 17th. They're just looking to get through August, this Friday, to put in that August expiration, the last expiration in August will come on Friday. Then we start moving into September, and then we're going to be finishing the third quarter. So there's a lot of things that kind of start to get put into place, and that we could just be on hold until, first of all, NVIDIA's earnings. Second, if NVIDIA comes out and does blow the doors off, and the market just goes, this is the best thing we've had out of this earnings season, then we're going to get that strong rally that we thought we might get a continuation of today. But we might have to wait till Wednesday after the close to get it. So, and then once that comes in, whether it actually holds itself up, I don't know, because what comes next would be the rate cut that the market is putting in place and saying, yep, we're getting it, we're getting it. And Powell might just say, yep, okay, I told you that we'd start him here. Here's a quarter of a point. And that's all you get. And so the market kind of goes from there and goes like, well, great, thanks. And then still decides to come down because I think, there's just a lot of smart money that's kind of getting into a lot of different positions that I'm seeing, in the spiders in the S&P, and also when it comes to volatility. So I think all of this put together could really dispel we are getting closer. We are getting closer to finishing cycle 3. So that means we're getting closer to finishing minute 5, minor 5, intermediate 5, primary 5, cycle 3. And in the NASDAQ, it's going to be primary 3. So in the NASDAQ, we're getting ready to finish. Let me start that over. Minute 5, minor 5, intermediate 5, primary 3. So we'd be going into a primary fourth wave, which could be pretty heavy duty. And everything could still come in as algorithms are kind of predicting that we're likely going to get an October drop, followed by a surge up into the latter part of the fourth quarter. Well, I'm thinking we can get up there and finish this primary third wave. We come down in a primary fourth wave. That could be the slump, the October slump. And then once we're done with that, we kind of jump back in and we go back up. Now, if I take it out and just put it on the daily chart, once we're finished with minor 5 and intermediate 5 and primary wave 3, we're going to be looking for, I'm going to go out. Where are you? Wherefore art thou? So what the correction, once we're done with primary 3, the correction suggests we come back to the lows of the intermediate fourth wave. That's October of 2022. So what basically are we doing is correcting that entire rally for the last 3 years. That would be really interesting now, right? And then that sets the stage for a primary fifth wave back up. So it could be an interesting drop down and then an interesting rally back up. Now, I think a lot of that can happen quickly, and a lot of it can just be, what's happening around the globe. Something could strike it and something else could bring it back up. And what's happening inside the country. There's a lot of things to choose from that could go totally wrong. And we get, from an AI bubble. Here we got another one. Here we got another story. AI stocks are in a bubble. Why are so many investors refusing to believe it? I don't know. Go read that article. Um, so there's that thought. I mean, I started to read stories, to be honest with you, or just news briefs that they're talking about that the AI bust will be similar in nature to the dot-com bust in 2000, 2001. And I kind of was there. And yes, that might just happen because the companies that are truly producing I think, survive because they're so well funded. But all the auxiliary may suffer because back in the dot-com bust, it was just companies had to put .com after their corporate name, and the stock price went up. So we've witnessed in this AI craze that any auxiliary companies that had a part to do in AI or were adding AI to their products got the boost. Well, maybe that starts to come out of the market. I don't know. But it would be fitting for a primary fourth wave correction, for example. That's where I think that could happen. And then you get a primary fifth wave because when it's over, we will go back up. And in the S&P, it's going to be a cycle degree fourth wave. And when it's done, a cycle degree fifth wave back up. Same in the Dow. So yeah, these things are out there and they're waiting to happen. We just got to get to that point. So just remember, in a corrective phase, there are 13 different variations of the correction the market can take. So I just gave out 2 or 3 here. I mean, I cannot discount enough that this fourth wave is actually still back in progress. It's an alternate. So this would be this would still be the irregular B wave, and this would be 1, 2, and we're going to come tumbling down, and that's why these are still here. So again, what happens if we get up to a certain point And then suddenly we come flying back down, all before the 17th of September. So just too many combos here. And so to be rigid and say, oh no, we're going to go up, we have to go up, it's all being projected to go up. Yeah, I continue to see that. But here's the other side of the story. And so let's just be prepared, I guess, and know if we're going to get breaks, what our possibilities are so we can trade it and position for something a little bit further out, which is going to be September the 17th. All right. So spot gamma levels, everything kind of stayed in place for a long time today. The market, the Qs, played inside the volatility trigger, which was at 572. It went up above it. It did great. I think it was, and then 573 or 575 may have been like uh, large gamma 2. And so if I had to go in, I think that I know it got down to 568, so it broke 570, and then it broke 572. I don't think hold on. The Qs are going to show me what the intraday high was. 573. So yeah, it did get back above 573. And that was about it. Now, let me just double check to see what we had coming in for the Qs. 572 was the volatility trigger. So it played up and down with that for a while. Finally, to get above it, got up to 573, came back down, closed back below it, and closed back below volatility trigger and closed back below zero gamma. So it's, it starts to flip it back to that negative, right? We saw the VIX. They were selling it, so they were moving some things back into the risk-on type of a trade. So that's kind of what's going on, flipping around a volatility trigger, flipping around trying to get back up past other large gamma positions. So a lot kind of going on behind the scenes, but producing nothing of any real excitement for us. Again, NASDAQ today, oh yeah, the volume was like less than 400,000. So they always wipe that out, so I forgot to do. But I do remember from checking it before. So less than 400,000. I was like 363,000 contracts today. And that really includes the Globex session overnight. It's a really thin, low volume day. And so those are our scenarios. That's our plan. And we're going to wait for the market to make its choice. So this could be 2, and this could be our 1, 2, and this is a 3. We hold this 4. We go back up, put in the third, and then go from there. Or this is going to be A, B. We come back down to here, put the C wave, put the 2 over here, and start that rally all over again. That's a possibility. Or we have wave 4 still in progress. This is the B wave and the irregular B wave, and this is wave 1 of C, wave 2 of C, and we start to break. And that would signal what would signal it. We come and break 23,000. We come down, flying down, we get below 23,000 and not look back, then we're in the C wave. We're in a C wave down, and we're in the 3 of C. And then we've got these levels that still would come into play. All right, and I'm not saying any of it's going to come through. The market's going to make that determination, not me. But I'm going to be ready for whatever it decides it's going to toss out at us. All right, that's going to be it. Our next update will be tomorrow morning.